First, Bloomberg.
Welcome back to Money Moves on Bloomberg Television and streaming all day long on your tablet, your phone, and at Bloomberg.com. Virginia's state pension plan is one of the biggest in the country with almost $60 billion in assets under management. Our next guest is on the Investment Advisory Committee of that plan and focuses specifically on emerging markets. Deborah Hewitt is with us now. She's also an assistant dean at the College of William and Mary's Business School. She is with me from Williamsburg, Virginia. Deborah, thanks so much for joining us. We know the Virginia retirement system, the VRS, has achieved a 13% net return on its investment portfolio last year. How did the team do it?
Dierdre, there's a lot of focus at the VRS on asset allocation and strategic allocation among the various asset categories. And I have to give credit to the board, who spends a great deal of time focusing on that, as they should. The committee I serve on, the Investment Advisory Committee, provides input to them. But they really take a very long-term approach and set the asset allocation. And then, to their credit as well, give the staff flexibility to maneuver strategically and tactically within those allocations. So I think it's a combination of those factors that has over time allowed the performance to be so good.
Now, Deborah, we know your specialty is in emerging markets investing. In the past, you said there are three major components to managing investments in those regions. What are they?
The first two are not going to be any surprise to anyone, and that is United States Federal Reserve policy, United States fiscal policy, and the third one, though, is China. And while that is probably not a great surprise to most people either, I think what's different about the way I perceive that is that China is now the third leg of the stool that you have to look at in every aspect. Not just, gee, their growth forecast has been cut by a couple tenths of a percent for this year, down from 7.5 to 7.1. That is missing the point entirely. We have a new paradigm here, which is that another country is equally important over this decade to the investment returns in most asset categories, equally important to what's going on in the United States. So investors really need to look at how every one of their asset categories is going to be influenced long-term by what's going on in China, as much as we now do for what's going on at the U.S. Federal Reserve Board and with U.S. fiscal policy.
So, Deborah, what does that mean as far as an investor is concerned? Does that mean taking a position on the yuan? Does that mean betting on certain parts of the Chinese economy or certain companies here that do business in China?
I really think it's a combination of all of those and so much more, too. And frankly, there's a lot more work to be done in understanding exactly how this is going to play out. I think it's a multiple-year initiative that we all need to get started on. But I can give you just a few of the ideas that we have so far. And for example, China now has $3.5 trillion of reserves. They're held about 60% in U.S. dollar. And they're not really that happy about holding such a large proportion of their reserves just in U.S. Treasury bonds. So they're looking to diversify. And they have been doing that already. Now, it's hit the news big with the Smithfield acquisition. But that really is just one of the more recent acquisitions that they've been making internationally. Most U.S. investors, you don't hear them talk about the fact that China owns part of London Heathrow Airport, that they own a number of ports around the world, infrastructure. So what's going to happen is that China is going to diversify their holdings, and if we can identify the sectors that they are going to move into, and even to some extent the countries that they are most likely to move into, that will help determine the investment returns in those categories.
Okay, so you mentioned infrastructure, and I know that's basically a big theme no matter where in emerging markets you're considering, and I'm thinking of South America. I want to ask you about Brazil, because with the Olympics, with the World Cup, it's a country that a lot of people are paying a little bit more closer attention to. We know infrastructure is, in fact, a challenge. I mean, there's people that say they can't even fly in, they can't fly out. It's a bit of a mess. Are there good opportunities right now in Brazilian infrastructure?
I think there are, but I don't think Brazil is the best place. They are running flat out now trying to get ready for the World Cup and the Olympics. And I was just there a year ago, and you're exactly right. The airport there in Sao Paulo is about like a small local airport here in the United States. You just can't imagine how it's going to handle the volume of traffic that it needs. So there are clearly needs there, but I don't think that's the best investment in infrastructure right now. I'm looking at more things like ports, and this is where the Chinese are putting a great deal of money globally. They're setting up sort of a port structure around the world that will be able to handle the new ultra-large carriers. And those are in more strategic places around the world.
Deborah, out of curiosity, when you talk about, let's say, foreign ownership of ports, I mean, are there security concerns? Is this something an investor has to keep on his or her radar screen?
I think here in the United States that is a big concern. Of course, we saw the port deal turned down a year or so ago, and by Dubai making an acquisition offer on a U.S. port. And I think that's going to be true as well for the Chinese trying to acquire into U.S. ports. They have small stakes in the port of Seattle and Los Angeles, but I think to see them have a very large stake here in the United States is going to be a little bit out of the question for now. But that's not true in other countries. Look in Africa. They've got big stakes in Nigeria, of course, due to the oil. They're looking at some South African ports, again, due to the commodities. So I think in other countries, there's such a need for that capital. Here in the U.S., we can take a little different stance on it because we can probably finance those upgrades ourselves. But that's not always the case abroad.
Deborah, thank you so much for the time. Great to speak with you. Deborah Hewitt joining us there. She is Assistant Dean at the William & Mary School of Business and a member of the Investment Advisory Committee for the Virginia Retirement System, joining us there from Williamsburg, Virginia.